Is it me, or is it 2021 all over again? I mean, according to some, we have Tesla 30xing from here, meaning basically it's going to be $6,000 per share. Palantir is going to 25x and be up over $500 per share. And somehow, incredibly, Sofi is going to 75x from here and be up over $400 per share. Yes, these are all great companies that I own and that I absolutely love, but are these prices even realistic? So let's dive into that specifically, and let's talk about some very uncomfortable truths about all this that you absolutely need to hear. So make sure you like the video if you enjoy getting the truth without the hype and kind of separating fact from fiction with a lot of this stuff. And the biggest discount ever for my group expires days, so make sure you take advantage of the Black Friday sale where you get to see all my buy and sell alerts in real time. You get to see my complete watch list with price targets. You get 5 courses for free. You get access to the best 6, 7, and 8-figure Discord out there. You can use the stock analyzer tool for free. You can slide into my DMs, jump on our live Q&As. I put 3, 4, 5 videos a week together for you guys just in the group there. It doesn't get released on YouTube or anywhere else. And a ton more, guys. No group has more content than we do, so make sure you check out the pinned comment down there and get your spot that is limited before this sale expires forever and the price goes back up. All right, so a lot of the concepts we're going to talk about today are exactly the same, but obviously the 3 companies we just talked about are very, very different type companies, kind of in different parts of their journey there. So let's kind of take each one and kind of break them down piece by piece. And we'll start off with Sofi first. And I'm sorry, right off the bat here, I don't see any way that we 75x from here. Now that doesn't mean we can't have an incredible return and all kinds of other great things happen with Sofi, but I just don't see a 75x from, I mean, maybe decades into the future, but I mean, who the heck is guessing decades into the future? And so many things can happen, and then that's a complete crapshoot at best. But you also have to consider that as they move further and further kind of into more traditional banking, maybe not all the way there, but as they continue to grow and move more into traditional banking outlets in order to continue that growth, the growth rates overall are going to slow the further down the trail we get with this stock. And they are still not profitable yet, which means we can't even really assign a multiple to it. Now, I agree right now, it's probably going to get a fintech multiple, but as they get closer and closer to a traditional bank, they are going to start seeing that multiple start to come down. Now, obviously, I hope Wall Street doesn't get crazy and decide to give it a complete traditional bank multiple, because then really the bull case for SoFi really falls apart. But nonetheless, even if it just kind of skews from pure fintech, you know, just closer towards traditional banking, not all the way there, even if it's just 25% of the way there, that really makes something like a 75x on the stock seem really further and further from reality. Basically, I can double or even triple the multiple of a traditional bank, and it's going to be really hard, if not impossible, for SoFi to hit that number in the next decade, much less by 2030, like a lot of the folks are out there telling you is going to happen. I love the company. I feel I'm going to make a lot of money from this stock, and I'm going to make a crap ton of money if this particular case actually happens. But for right now, that is only pure 100% speculation. So let's cover Palantir, because obviously it's in a little bit of a different spot than SoFi is. And it also perfectly illustrates one of the main uncomfortable truths that we have to talk about right here. And of course, we'll get over to Tesla as well next after this. Now, because Palantir is finally profitable and we can kind of see what Wall Street's willing to pay for it, it makes it a little bit easier to kind of project out numbers into the future. But, the growth rate is actually tricky to kind of figure out, especially kind of with how, kind of a cat and mouse game that Alex likes to play with us and with Wall Street analysts and everything else. So it's a little bit harder to grasp that. But more importantly, it's sitting at a multiple of about 70 right now, a future multiple of a forward multiple of 70 right now. And you got to kind of wonder, when the AI hype dies down, is Wall Street going to continue to reward Palantir with that high of a multiple? And more importantly, as future growth, as they kind of grow as a company and turn into kind of a behemoth that we all think they're going to turn into, as that growth rate slows, I doubt very seriously Wall Street is going to be willing to continue to pay that high of a multiple for Palantir into that future as those growth rates start to slow. So for me, I think a much more reasonable growth rate well into the future here, not right now, I'm talking about in the future, guys, as they mature, would be in the 30, 35 range or so, would be a very, very reasonable multiple that I could see large institutional players being willing to pay for Palantir. And I'm sorry, Wall Street hardly ever pays as high of a multiple as what they're paying right now for Palantir as a company matures like that. So banking kind of your future numbers on that, or an even higher multiple, which I've seen that one as well, is really not prudent in my estimation there. You're kind of hoping for the pie in the sky, the 1% chance that that happens, and not banking and not using a multiple that is the most likely multiple to get assigned to Palantir during that time. Don't get me wrong, that's great if it happens. I stand to make a lot more money. It's just not the prudent thing to do in this particular scenario. So whenever I look out kind of in the 10-year look, even if I give them that 70 multiple there, it's still very, very hard for them to get to that number in the first place. It's really, really hard to get to. Basically, that number is 10 years or more away. And that right there is kind of a problem whenever you're looking at these particular type scenarios and trying to figure all this out. And that leads us perfectly into uncomfortable truth that we have to discuss right here. This applies to every stock. We're using Palantir, I agree, but this applies to every single stock in the stock market. And you can talk to guys like Warren Buffett, Peter Lynch, all those folks like that. All of them agree completely with this truth about investing. And that is, you can make fairly accurate predictions out to next year. I agree. Maybe 2 years, but that starts to get a little bit muddy there. 3 years is, maybe an educated guess at best. And anything beyond that is pure speculation. And when you're looking out 20, 30, or 10 years from now, whatever the case is, it is pure 100% speculation. There is no grounded truth, no anything else. In those type of scenarios, when you're modeling out that far, everything has to go perfect. Everything has to go right, and everything has to be consistent in order for there to be any degree of accuracy with those models, which, as we all know, that is never what actually happens in real life over a 10-year period. So sure, you can model out anything that far, but it's strictly a guess. It's not going to be right, and it's basically pure speculation. Which leads me perfectly to Tesla to illustrate how flawed all of this speculation is that we're discussing. And here, let me just give you the flat example here and just get straight to the point. When Tesla was at $400, how many people out there who were bullish on Tesla, I'm not talking about Gordon Johnson here, I'm talking about people that were bullish on Tesla, modeled out Tesla being at $100 per share 2 years later? I went and looked and I could find nobody. Nobody modeled Tesla going from 400 to 100 2 years later. As a matter of fact, I found the exact opposite. The lowest price that I could find was around $800 or so. There were plenty of people that had it at $1,000, and I saw $1,500 and even more ridiculous numbers than that. And yes, I adjusted for the split and everything else in order to give you those numbers, so I'm giving you those numbers split adjusted. You cannot model out human behavior. You cannot model out 10% inflation coming up out of nowhere. You cannot model out the Fed raising rates at the quickest pace in history. You cannot model out what the heck Elon's going to tweet on Twitter. You cannot model Cybertruck being harder than expected and actually losing money up front. You cannot model out all the different geopolitical events that have happened in the past 2 years. You cannot model out all the different crazy variables that happen every single year in the market, to stocks, to the economy, to the world, and everything else. It is impossible to model out all of that. And because none of those things can be modeled out, it makes most of these models absolutely useless in the end, and absolutely even more useless when you're trying to speculate out 8, 9, 10 years from now. And that's the biggest point I want to make with all these sort of projections and everything else is, don't base your investing decisions based upon all these models and everything else. Base your investing decisions based upon solid fundamental investing concepts of the company and what it's doing right now today. What is its valuation? That right there is what actually tells you, should you buy the stock or not? If you're looking at the stock and all the fundamentals line up and everything looks great and the company is performing quarter in and quarter out, that right there is where valuation keeps you from making a mistake. Like when all the models tell you to buy at 400, because it's going to 800 the next year, 700 the next year, or 2 years from there, whatever the case is. All the fundamentals of Tesla at that time were great. Everything was incredible except for the valuation. So the valuation told me, don't buy it at 400 because it needs to come down. The fundamentals all said, this is a great company. Tesla is a great company. But the multiple actually said ridiculously overpriced because it was up over 1,000 at that time when it was at those all-time highs. That's the difference between sticking to fundamentals and using models to kind of project what's going to happen in the future. When the reality is, we don't know what's going to happen in the future, and most obviously, nobody had Tesla at 100 after this time frame, going from 400 down to 100. The models were all useless in this particular scenario. However, having a valuation and having that plan and understanding the fundamentals of Tesla kept you from being scared of buying whenever it fell down to 100 because you knew it was undervalued and all the fundamentals said, hey, everything is still intact with this stock. 100 is a great price, and so therefore you were buying instead. Now, let me be very clear. These are all great companies. I own them all. I am bullish on all these stocks, and I think they are all going to perform and make us all a lot of money over the long run. If you want to look out 2030, they're all going to make us a lot of money by 2030. I agree there completely. And of course, if all these crazy bull scenarios happen, hey, we're going to make a ton of money. It's no doubt about it. But there is no need to get out there and speculate like this. Now, I agree it can be fun. Maybe if you want to do it as a fun exercise or whatever the case is, oh, okay, that's great. You know, you kind of want to see what could happen or what could be or play kind of the what if game or whatever. That's great. But that is absolutely useless to your actual investing. Actually making an investing decision today, that's pretty much useless at this stage because it's speculating about something that nobody knows what's going to happen by the time we get to 2030. Matter of fact, I can guarantee you it's not going to look like what we all think anyways. Now look, you want to look out next year? I agree. You can make a very reasonable assumption about the next year, maybe the next 2 years. Anything beyond that, guys, it's pure speculation, and I'm not into speculating or playing those games. So to avoid trouble, stick to the fundamentals, stick to your plan, and leave the speculating for just fun time whenever you just have a little bit of extra time or something like that. Otherwise, completely ignore it and continue to stay strong, invest in your plan, invest in yourself, and continue to execute on your plan. And guess what? It'll all take care of itself by the time 2030 rolls around. And the biggest discount ever for my group. So make sure you take advantage of the Black Friday sale where you get to see all my buy and sell alerts in real time. You get to see my complete watch list with price targets. You get 5 courses for free. You get access to the best 6, 7, and 8 figure Discord out there. You can use the stock analyzer tool for free. You can slide into my DMs, jump on our live Q&As. I put 3, 4, 5 videos a week together for you guys just in the group there. It doesn't get released on YouTube or anywhere else. And a ton more, guys. No group has more content than we do. So make sure you check out the pinned comment down there and get your spot that is limited before this sale expires forever and the price goes back up. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.